Hello and welcome to interest.co.nz. I'm Gareth Vaughan and I'm joined by Dan Bell, who's Director of Sales at HiFX, for our Never a Dull Moment currencies report. Welcome in again, Dan.
Thanks, Gareth.
And certainly no dull moments so far this week. The big push for parity with the Australian dollar yesterday didn't quite happen, did it?
No, it was a bit of an anticlimax in the end. We were all hoping, or not hoping, but watching and waiting to see what the Reserve Bank of Australia did yesterday afternoon, and they made their interest rate announcement at 4:30. The market was expecting them to cut interest rates from 2.25 to 2%, but they didn't cut rates, so we saw the Australian dollar strengthen. Therefore, the New Zealand dollar versus the Australian dollar dropped, and we actually lost about a cent after that announcement. Previous to that announcement, we were trading around 99.20, so off those recent all-time highs, we got up to a high of around 99.78 against the Australian dollar on Monday. So not far off parity, but not quite there.
No cigar.
No cigar.
So what might be the next catalyst for, I guess, another tilt at parity?
Yeah, well, I guess if you look at what's happening in the Australian economy compared to New Zealand, Australia has this headwind from a huge drop in the investment in the resources and mining sector, and we know that they had this massive boom. We're seeing obviously huge weakness in iron ore prices and a lot of the other export commodities that Australia produces. And the Reserve Bank of Australia is really trying to prepare the Australian economy for this structural change. So they want a weaker Australian dollar. They want to try to encourage other export industries to pick up from where the resources and mining sector has sort of left off. So they are committed to continuing to, I guess, ease monetary policy. They said yesterday in their statement that they're going to obviously keep the door open to further easing, and they still think the Australian dollar is too high. So at 2.25%, we still expect the cash rate in Australia to drop to 2%, and the market is pricing about a 70% chance of another interest rate cut from Australia in their meeting at the end of May. So in between now and obviously the end of May, there's still potential for the New Zealand dollar to push up to that parity level.
You mean beginning of May?
Beginning of May, yeah. For the RBA, correct, yeah.
And obviously prior to that we'll have a Reserve Bank of New Zealand OCR review on the 30th of April. So, I mean, we'll obviously look closely at what Graham Wheeler and his cohorts have to say there as well. Yeah,
indeed. I mean, it's never easy for the RBNZ, obviously, where we've got a situation now where the New Zealand dollar is very, very strong against our major trading partner, which isn't great. I mean, some of the politicians are sort of celebrating the fact that the New Zealand dollar is so strong and it reflects our strong economy. Yes, that's part of the story, but I think the other part of the story is that we've got an export sector that will find this pretty tough. We're going to be competing now. We're at a higher exchange rate, which makes us less attractive for Australian businesses to buy off our manufacturers.
And obviously, Wheeler, we know that he's wrestling with the Auckland housing market. We've got figures yesterday from Barfoot and Thompson, which is the biggest real estate agency in Auckland, showing a medium house price in March of $711,000. So, TWI up around 80. So the usual issues for Graham Wheeler to wrestle with.
Yeah, absolutely. And I mean, the house prices in Auckland, as we all know, continue to surge. They're up about 14% in the last 12 months. Interesting to note that Sydney house prices are up exactly the same amount in the last 12 months. So in Australia, you've got a situation where house prices have taken off across the main capital cities. They're up about 7% over the last 12 months, and in Sydney, obviously, a lot stronger at 14%. But the Reserve Bank of Australia is obviously focused on trying to restructure and rebalance their economy, and aren't necessarily. I mean, they mentioned house prices in their statement, but they're not as focused on it as perhaps the Reserve Bank of New Zealand is, and in general, New Zealanders seem to be a lot more focused on property prices across the board. So it doesn't seem to get as much airplay in Australia.
Now, obviously, the big kahuna from the global markets perspective is the US Federal Reserve. Now, non-farm payrolls in the US over the weekend came in quite a bit weaker than expected, 126,000 new jobs. Are the expectations of the Fed hiking rates it's going to be the first time in 9 years, when and if it happens, been talking about, the markets have been looking at June. Is that slipping a bit now? And where are the sort of global, I guess the global concerns around deflation fitting in with this as well?
Yeah, so US employment over the last year or so has been very, very strong. The US has been generating over 200,000 new jobs every month recently. Last Friday they announced the figures for March, and it only came in at 126,000 new jobs, so significantly weaker than expected. However, that's only 1 month. So right here, right now, yes, we did see some weakness in the US dollar, and we have seen some analysts come out and say, well, look, maybe this is going to see the Federal Reserve push out the start of the tightening cycle. I mean, their interest rates there, the Fed funds rate is currently set at 0 to 0.25%. So we're just talking about them starting to hike interest rates. So at the start of the year, we're probably looking at June. If we see another weak employment number out of the US for April, I think we'll definitely see that get pushed out, potentially out into Q4 of this year or even into 2016. So it doesn't look like we can take one piece of news out of the US to necessarily change the overall outlook. The underlying strength in the US economy, I think it's still going pretty well. We'd have to see more confirmation of that before we start to change the view on a stronger US dollar this year.
And the New Zealand dollar sitting sort of just under 75 US cents this morning.
Yeah.
Are we sort of looking at that tracking around the mid-70s for the time being?
Yeah, 75 cents. I mean, we've been down as low as sort of 71.70 over the last couple of months in this most recent sort of weakness that we've seen. Obviously, we've seen a correction. We've traded over 76, almost 70, up to 77 cents. So we're sort of consolidating really at the moment around 75 cents. I guess if you look around, I mean, the weaker employment numbers out of the US did sort of have an impact on the US dollar in the short term. I guess the New Zealand economy is still bubbling along at a decent pace. So I'd imagine the New Zealand dollar is going to remain well supported. I guess the thing about any weakness that we see in the US employment numbers, it's going to actually keep the odds of interest rate hikes in the US on hold a little bit longer, and that's actually pretty positive for risk sentiment, which will favour currencies like the New Zealand dollar. We pay 3.5% as our cash rate. It's pretty much the highest out of the main developed economies. So investors will be more likely to want to hold on to our currency if the Fed aren't going to be raising interest rates as quickly as they thought.
And Greece, of course, is in the news again, never seems to be out of it for too long. They've got a repayment deadline with 460 million euros owed to the IMF on the 9th of April, so not far off. What sort of outcome are people expecting from that? And I guess the Greece or the Greek situation in general, I mean, is it seen as important by the markets now to the EU as it was a couple of years back?
Yes, I don't think the Greece situation is getting as much focus as it did a few years ago when we thought that Greece was going to leave the Eurozone and that was going to create a Lehman Brothers type sort of event where you'd see huge risk aversion across the markets. I think everyone has sort of accepted the fact that the IMF and Greece and the other creditors are going to work with Greece to get them through this period. I mean, they owe them some money this week. Greece is out trying to raise, sell government bonds to local investors, but are also reaching out to the Chinese and to the Russians. So, and Greece is playing a brinkmanship game. So they know that they have a few cards in their hand. The EU don't want Greece to leave the Eurozone, so they're going to cooperate and work together as much as possible overnight. Again, Greece has indicated that the IMF is going to be flexible and around the reforms and allow them to continue to kick the can down the road, I guess.
And staying in Europe, there's an general election due in Britain on the 7th of May. Obviously, there's a coalition government there at the moment with the Conservatives and the Liberal Democrats. Talk of potential for a hung parliament, so it's a very uncertain outcome. Is this having any impact on the pound or likely to have much impact on the pound over the next month?
Yeah, it is. So we've seen the New Zealand dollar strengthen against the pound over the last few weeks, and we've been up into the high 50s. We were sitting pre-Christmas, we were down under 49. Actually, we got into the 0.47s against the pound for a while. So the election result in England doesn't look like it's going to be very certain. The other thing in the UK is that expectations around the Bank of England actually hiking interest rates have come back as well. So we don't think the Bank of England are going to hike interest rates this year, which again is making the pound less attractive to investors from a yield point of view. So it looks like the New Zealand dollar is going to remain quite strong against the pound as well. Obviously, we're strong against the euro, trading close to all-time highs over 69. All-time highs against the Australian dollar, and still pretty strong against the US in the context of the last 25 odd years.
So the strong New Zealand dollar story is going to continue for some time.
Listen, I think it is. I mean, we're expecting the economy to grow at over 3% this year, compared to most other economies. That's a pretty decent pace of growth. So, plus we've got a stable government, and we're probably going to record a decent Crown accounts this week. So our house is in order compared to a lot of other countries at the moment. So. The New Zealand dollar will remain strong as a result of that.
Well, thanks for that, Dan. That's Dan Bell, who's Director of Sales at HiFX, with our Never a Dull Moment Currencies Report, and I'm Gareth Vaughan at interest.co.nz.